Good morning and welcome back to another pipeline trading video. This morning, I hope you have your espresso because buckle up. This is going to be a fun one. I got an audience today. I got my eldest son watching before he heads off to school. And I just want to go over, markets, and they're sitting at record high levels again. Dips are getting bought. I want to talk about that, what I think's driving it. I want to talk about oil, the semiconductors, gold. We definitely have to talk about Bitcoin and ETH because that's what I've been covering on this for quite some time, and it's actually starting to unfold in front of our faces. And BMNR, HIVE, Intel, Tesla, and I'm going to talk about the 10 years for a bit. And then I have a little treat towards the end on something that I found very interesting and I don't know what to make of it. So maybe you guys can leave a comment below on what you think of the last chart that I'm going to pull up. So what's very interesting is how sentiment still feels cautious in retail. The recession fears have never quite left. The strait has never been fully opened, but yet the market keeps going higher. That's the hardest part about trading this market today. And let me tell you, I have needed the patience of a monk to get through this last month because it's just been, it's like death of 1,000 cuts is how I feel. If we go to the charts now, what I'm looking for is we're seeing things. If you look at the green line, that's the 10-day moving average. And then we now just started to touch the 20, and that was May 20th, right? Be careful because when you see that, what you could potentially see, I'm going to try drawing this in. And this is on the 4-hour chart. And if you go to maybe I'll go to a lower time frame because the lower time frames, you get to see it a lot better. Okay, where are we? Okay. So look at how we were above for quite some time. This is the Bollinger Band which we touched. So we're at a crossing point. Either we go up or we're going to come all the way down to like here. Because how I would play this is looking at if there's anybody trading the SPYs, you're going to see about a 1% pullback for sure at some point. But what I would be looking for is basically to this zone over here, potentially, or this zone. Because with how much we've gone up, this is due for a massive reversal at some point. And when I say a massive reversal, I don't mean like a market crash. Not to say that that can't happen. But if we're going to continue to go up and the valuations are going to continue to increase, and you heard about SpaceX and their IPO, like I think you're talking $2 trillion. So the amount of money that's flooding into the markets is astronomical. You're going to see some sort of pullback and you want to see it consolidate. If we make a lower low here and we take out this liquidity down here and we don't go and make a new high, that's how you would kind of have an idea that the top is in. And then you can expect a bigger pullback because this market's just been ripping. So I would look out for that. You're going to see this type of cross, right? Like we've seen here. When that happens, you're going to want to basically see if we do this and then fall apart again. That's what you'd be looking for. And then that's a good idea on, okay, we're going to have a bigger move to the downside. Not maybe a crash, but a bigger move. But if you look at this, I move the fib lines up, this is what is, when I say a bigger move, don't think for a second we can't see a 6% pullback, which would freak people out considering that the sentiment and everything else, even though it looks bullish, in the background, there's still things that are a little fearful. If we go to the semiconductors, if you're wondering what all these lines are, these are all fair value gaps. And there's a lot of them. And typically with fair value gaps, they get filled eventually. Not to say that all of them get filled, but the good majority towards the top will get filled. This is the hardest read because when I go back and I look at what I had in from before, I was calling for a pullback sooner. And as you can see, look how much I've had to adjust my Fibonacci lines. So this is saying, okay, maybe we get a pullback to 444. I don't even know at this point because this thing just wants to keep going and going and going. And where I'm starting to, not to say that I don't think we're going to come down, we are going to come down. It's just in this market, you don't know when. So I'm not going to forecast timing. But what I would say is, again, watch these moving averages. Because if we do get a healthy pullback even to the 50, those could be good buying opportunities because we are still in an uptrend. So you're going to want to wait and see how this whole thing plays out. Because if I go to the lower time frame, these are all gaps, guys. These gaps will get filled. And that's the scary part, is when they get filled, I don't know, people are going to freak out when this starts to unfold. And just like anything else in life, when shit hits the fan, it's what you're going to do in it. Have a plan. So right now, we potentially are going to see if this is going to want to make a new high. If you don't see this make a new high and things start to like hug the moving averages, then it's exhausted. Because you can see right now what I'd be watching for. Right here, we had this spike in volume on this red candle. That's not good. That's distribution. So be mindful of that. As the market's going up, institutional money is slowly unloading because they know that the music will stop eventually. Oil. Oil looks like it wants to go to the downside. We broke the 50. These drawings were in from before, and what I was saying could play out if you go back to my other videos. I said we're going to come down, maybe up, and then continue to the downside. But I'll get rid of this for this purpose of this video. So here's where you have to be patient. Right now, the way the moving averages are going, oil's still bearish and potentially going to the downside. No matter what you're hearing in the news, doesn't mean anything. If I go to the lower time frames, oil looks like it's going to chop. Now, what you want to watch for to see if this is going to happen or not, just draw a trend line like this. It's that simple. Look how long that took me. It took me 2 seconds to do. Okay? Doesn't have to be perfect, but it gives you an idea. This type of downward action is going to go to the upside eventually. So I expect oil to potentially go back to 104, 101. First stop will be 95. Second stop will be 101. And it's going to chop in this. Now, here's what you're not going to like to hear today. Oh, no. What just happened? So we know that there's a head and shoulder potentially. Okay, we'll get rid of this. And we won't get rid of that. We'll get rid of this. We're not getting rid of that. Okay, I'll get rid of all the drawing. Now, the one thing I want you to be mindful of is the fact that this pattern that we're seeing is actually a bullish pattern. Typically, what would happen to draw this in, you go up and it's chop. And the thing is, the reason why this requires so much patience is because you don't know when it's going to go. So if I keep drawing this out like this, right? This is what I mean about having patience like a monk. This could go all the way to here. Before going to the upside. I've seen this happen, and it will literally go like all the way to here. And what's interesting is it happens when you least expect it. So right now, oil looks bearish at first glance. Let's see where it finds support, because just like we curled over here, yeah, and the difference is we got to see how it acts at the 50-day moving average. If we go and touch the 50 and we get rejected, so watch the 94.19 level. If we fail that, then we're going to keep going to the downside. And maybe we're going to bottom out around here at 85. Okay. And the markets will continue to do well. But as you know, with the news going on, there's a very good possibility that that doesn't happen. So be mindful of that. On the shorter scale, if we go on the 1 hour time frame, 1 hour time frame, there's gaps up here at 96, right? There's fair value gaps even higher. So we're going to see with the volume on where we're heading. But right now, this whole trend line going to the downside, once we get a trend reversal, and it looks like it's trying to do it right now for the record, we have a gap up here to fill at 96. So expect that. We could fill this gap and then come back down to potentially 86. I don't know. But these are levels to watch, because if things escalate in the Middle East, it's not going to be good. Not going to be good at all. So if we go to gold, gold looks like it wants to continue to go down. Also, it looked like it was breaking this diagonal trend line that we had in, or whatever you want to call it. And we're now breaking to the downside. So, I mean, there's a good chance that gold's going to go down to 4,000 or lower, maybe where all this liquidity is, maybe 39.94. And again, if you look at this and I draw it out, this is actually bullish. So I don't expect gold to plummet down to like where it was, or not to say that it can't continue to go down. This could continue to bring it all the way down as far as this line will go, right? You could keep coming all the way down here. But right now, with what's going on in the markets and a flight to safety, if anything were to happen or escalate, this is a bullish pattern. So we're going to see how does it handle everything going on. It's holding the key Fibonacci levels, but yeah, this looks like it wants to make another leg down. You can see with this wick here, typically it would probably, if I was a betting man, I would say that this is coming down to 4,000. And we'll see, because the other interesting part about 4,000 is look at this zone right here. So this is a huge level of where it had build up before it made its leg up. So you could actually see support here going up, not making a high and then coming back down, right? Just some food for thought. There's many ways of looking at this, and you can't just have one thesis in your mind on, well, I should say, you can have a thesis. You shouldn't have one outcome that you're sticking to, because there are multiple things that can play out, and it happens when you least expect it. But the main thing here with the markets, guys, because I'm going to go into Bitcoin and everything right now, is AI is still the main driver. We have revenue growth, AI spending, so they're spending a boatload of money, which is good. Infrastructure demand, anything tied to enterprise AI adoption is what's causing this rally, period. Some of it I agree with, some of it I don't, because whether this becomes another bubble or not, AI is genuinely the next industrial revolution. They called it the fourth industrial revolution from a decade ago. And NVIDIA's momentum is spilling into the entire semiconductor space, which I'm not going to beat a dead horse. We talked about that. But the real big risk here is if Iran conflict with US escalates, oil prices go higher, inflation fears higher, volatility higher, you could see something catastrophic. And right now, why I think you could see something catastrophic is because no one actually even cares right now. Anything that we've seen with inflation numbers, anything that we've seen bad, nobody cares at all. And they keep buying up these things. The other thing that I've been talking about is the 10-year. The 10-year looks like it's going to rip. If the 10-year goes to 4.8 or higher, I mean, this is not going to be good. I mean, there's no way the Fed chair is going to be able to lower rates. And if this happens and the market tanks, sure, maybe he'll lower rates after that. But I think there's something that can happen with that nobody's really talking about. Where I think I guess, diamond in the roughs or the gems are going to be in the small caps, because the small caps are quietly waking up. And then you have the whole, market psychology. Everyone keeps waiting for the crash, right? That's actually counterintuitive to what's happening. That will happen, and that's why you don't want to think and go down the thesis of doomsday and everybody's bearish and recession calls and the crash predictions remain everywhere. That actually creates FOMO and underexposure, right? And it's just, this is why the markets keep going up despite everyone else's expectation of a collapse. But that's the whole idea of it. So think of it like this. Everybody's calling for a stock market crash. The market keeps ripping higher. So what does that do? It tells all the people that have been planning or hearing or watching and listening to what other people are doing, it tells them they're wrong. And everybody in retail starts to buy in to the whole thing. And then all of a sudden, you're buying at the highs and the ground falls out from below you. That's the whole market psychology behind it. Because when you hear people say, oh, the markets could be irrational longer than you could be Sullivan, because this could keep chopping up and up and up all the way to year end. Meanwhile, you're short now, building a short position, and you're going to bleed out. That's what will happen. So the other thing too is, this is a pro level topic most traders miss. The market is isn't moving straight up. There's money rotating from the mega caps to semis to industrials, industrials to small caps, energy to tech, depending on geopolitical issues. That means stock selection, which I've been saying I believe at the beginning of the month or before that, stock selection matters more now. Blindly buying indexes may underperform. and leadership changes, quickly in this space. That's a very good way to look at things in this market. Because if you don't, it's not going to work out well, right? So go back and rewind that part later and write it down. It's really good. It's a really good lesson, a lesson that I've learned long ago. And yeah, because if you even look right now, for example, one of the things that I was like a little cautionary on is that when we are getting towards a market top, Berkshire will actually underperform the S&P. And that's one of the indicators where it's like, he's sitting on a boatload of cash. The market is actually doing better than he is. And that means that we could have a little bit more upside, and it's normal in that environment, right? So if we go to Bitcoin, we broke out. I'll explain what these lines are. This line is actually, you okay, bud? Okay. You need some more? Okay. So this line is just connecting. It's not even connected properly. I don't know what happened there. So we broke out of it and everybody got bullish. Not to say that we can't be bullish, but this is going to come down and retest this level of liquidity. So the first stop that Bitcoin's going to go down to is 68,000. And we got to see how it holds. If you're wondering how I got this target, I drew in my line from over here down, put it here. The measure and move, if things accelerate, again, I don't know what, because we could go chopping. We could come down here. We could go up here. We could come down. Who knows how this is going to chop? But this is a huge level. So we're either going to hold the 62 to 66 zone as support, or we're going to come lower to 56, 55, right? The measured move on the head and shoulder says 49, which is interesting. So if you're saying, okay, how would I know that things are reversing, right? Well, you would be want to watch this. Like this also, this area right here, this is actually really good that I saw this in real time for you. See this? Looks a lot like oil. So you're having a head and shoulder in a bullish pattern. So you could see that right now, everything's going upright. That's bearish. So we're going to see this come down here. And when we get down to this area, I'm not going to sit there and say that this is 100% the bottom, because we would have to see how this whole thing looks and what type of formation it builds there. That's number one. So we'll keep an eye on that. First stop is 67, 68K for Bitcoin. ETH is already in it. Here's the thing with ETH that I'm just watching, because I don't know, guys. I don't have a crystal ball. First level of support I'm saying should be this line. Maybe we go and retest 1747 to 1842. Okay, that's what I'm looking for. And if you go back to the video, I believe I did at the beginning or last week, I said I was on the 3-day chart. And I said by Thursday, we should see this whole thing play out. And what a great call that was. Not all of my calls are that spot on, that I could promise you, but that was that was a really good call. A lot of luck on that one. So, and I don't believe in luck, if anybody's thinking that, because I know my wife's probably going to listen to this and say, oh, luck, really? Huh. So this right here could come down, touch over here, 1661 area, right? We could get a big wick down and close. I'd want to see the close at 1695. I wouldn't want to see that. I have a hard time believing we're going to take all this out and wipe it all out. I think this is a freaking great zone to start buying into ETH if that's what you know, again, this isn't financial advice. My opinion, what I'm doing. So I would be a player down here. Right now, I'm actually short. And so far, so good. I shorted with my friend BMNR. So you could see, if you remember, I was talking, and this is what you have to do. I said that there was a measured move for BMNR to come down to 15. It could even go all the way down to this line that I've drawn in from down here, right? I don't know how low it's going to go. I don't think it's going to come down to this gap. But if ETH goes all the way down to 1,300 or 1,100 or 1,000, like some are calling, then BMNR is going to come down and fill this gap at like 11. Where's it start? 12, 11. Okay. I don't know if that's going to happen because they just have too much money. Like if you look, they bought another 60,000. They're sitting on $12.3 billion cash. They have zero debt, and now they're staking. So I think they're projected to make about 500 million a year in revenue from their staking. So that's a big deal. So I would look for this target of 1749. And why I wanted to show this is another good example of what you can apply to Bitcoin and ETH if you're watching that, is look, we had a bear flag. We broke it. What did we do? We created another bear flag. So before, if it was the old me, the younger me, the less experienced me, I would have actually been looking to go long, and I would have got burned because I would have said, oh, this has gone down so much. There's no way this has to get it. This is going to come back up here. That's how simple and foolish I would have been back then. To just think it would come back to this level. Not looking for a grand slam, but it would come back. But in reality, this created another bear flag, and we broke it. So this was already drawn in. And if I go to the lower time frame, because I trade the 5-minute, this is the bear flag. This also was the bear flag. And I had this line drawn in because I had another line here. So what I had drawn in was the pennant. If you're wondering what that is, I'm going to show you. So this is again a bearish pattern. And I was watching, and this again, when I said patience of a monk, keep this in mind when you want to look at how hard trading can be. From the highest to lowest was 2%. So every one of these moves was like literally 1%. Do you know how boring that is? Do you know how hard that? Because sometimes if you're on the minute chart, you're like, oh, I'll just sell here, buy here, sell here, buy here, sell here. It is brutal. You want, as a trader, volatility. As an investor, you're just buying key levels as a swing trader and holding until your targets hit, which I'll go into some of those plays next. But this is why I said patience of a monk, death by 1,000 cuts. You're better off not to trade this market and to swing trade it, because when it does this, it will get you if you try and, like, I almost covered my short because I was negative at one point, and I'm like, no, this is just foolish on my end, because it was a wrong. I rushed the trade. I had other things going on that I had to get to, and then that was it. So I'll move on with that. Hive, wow, what a gem. This is played out perfect. And I think if we break above here, Hive's going to go up here. So I didn't get the pullback that I wanted. I never got into it because I missed this one right here. I was hoping that, and if you're wondering what these lines are, those are alerts. So I'll be alerted if Hive drops down to 318. Now, what's crazy about this is it's ripping while Bitcoin's down. While Bitcoin was ripping, Hive was going down because they own their Bitcoin miner. So it just came out that core inflation hit an annual rate of 3.3% in April, which is as expected. So the markets are probably going to like that. There's nothing unexpected, but we're going to see. For me, I'm going to watch to see how this plays out over here in these levels. And I would have loved to buy a good healthy pie. Right here at 318 is where I was looking to buy back. Like, I wanted to buy in. If this goes and just continues to rip, I'm not going to chase it. I'll actually be looking to short it at 680, and I'll wait for confirmation, because one thing I've learned is when this falls, look at that. She falls hard. Intel looks like it's going to potentially make another leg up. We have a reverse head and shoulders that could be forming. If it doesn't, then we're going to come down. Tesla, it wants to do exactly what I thought it was going to do. We hit our first target, pulled back to the 50 held, and now it's trying to break through to go up here. So I'm going to see how it plays out over here. And potentially, if this kind of dies off and goes up here, I might actually start shorting Tesla. That's one of the things I'm going to be looking for, because it had a really good rip. So we're going to see, does this go, and I don't know why this did that. It's sloppy, but I think we could go to like 513. I don't know where this line came in. Someone did something to my chart. So we're going to see where this plays out. And that is something that may not play like people are thinking. Because if I go over here and I draw the highs in and they touch to here, yeah, we could go to about in the fives. Now, if that were to happen, I would actually think that we're going to go short. Nothing has changed too much. Like, okay, they hit their earnings, 15% beat, 22.1 billion. So it's funny, the market's giving them a higher price, and they've actually made less revenue. So if you the treat was this: if we go to Bitcoin and overlap it with the S&P, this is interesting. Every time the market has made a new high, the Bitcoiners typically either Bitcoin runs first, or I think it was the last time when we had the whole crisis going on with banking, and I think I forget what the company was in China that was going under, but Bitcoin actually started its run while the market didn't do anything. Now the market is on a historical high. Meanwhile, Bitcoin's going down. So one of the things I just thought about the other night, this has never happened before. So when they talk about decoupling, the question could be, are we going to be in on Bitcoin this next move down? Is that our low? And then we go and make a new high in 2026? Think about that one. So right now, everything, like, look at this. Bitcoin made a high and the market didn't. The market now is making a high. So that's very, very fascinating. Look at COVID, right? They both did the same thing. Both had a run up. Both came down, had a run up. Came down here in April of 25, had a run up. But Bitcoin's run up topped in September of 25. This whole run here down is here. So the question is Bitcoin going to go and make a new high? I want your comments on that one. So I thought this was very, very fascinating on how correlated we're going to see. Because, like, looking at the charts on Bitcoin, this area, this zone right here, we should come down and test over here, right? I know you're probably confused with the numbers here because so Bitcoin numbers are on the left-hand side, if you're wondering. So if we go down here, that puts Bitcoin at 59. Okay? This area, if we come back and test and we don't go lower, that could be a double bottom. And I know that would throw everybody off, but I want to go back to something I did a while, I think it was a month or two ago. You're going to want to hold on to this information because I can assure you this is some solid information. If you go back and you see the death cross, what was it, on the 3-day, right? That was when the 50 crossed the 200. We talked about it on the channel. That was right here, okay? And we said that, is it going to bottom or is a crash or pullback going to happen? The bottom May, June, or July. I think I did a video on that, or April, May, June. One of those two scenarios. When this happens and it pulls back, there's a very good potential that this is the bottom for Bitcoin. Now, you're not going to know until it changes structure and price action and the moving averages do their thing that they're supposed to do in a bullish market. But there's people that are calling for $40,000, $30,000 Bitcoin. I don't see it. And it's not to say that it can't happen, because somebody looking at like, oh, we're going to come all the way. Remember, I said not all the fair value gaps get filled. Well, here's a perfect example, right? And if you're wondering where I came up with that number, remember this high, okay, of 68 was, it's now the floor. It should be this area. That's why this line is drawn in here. Should be the level that it does not go below. Just like when we broke above, right? Where did we find our support for the new floor? It was the ceiling for the last market. And then we went parabolic from there. It's going to be the same thing. And if you go all the way back over here, 17, 15,000, what was the floor? It was almost less than 20% of the actual top in 2017. So that's where I'm coming up with my numbers. There's a good chance that if I were to take this, draw 20%, boom. That's how I came to 55. So that's the exciting part. The exciting part is after this last move, and it doesn't mean last move like we're not going to get choppy. We're going to see what type of formation we're going to build. What I'm hoping for is that we're going to get something like this. If you see it going down right, then you know that it's only a matter of time before it's going to rip up. And I thought, and I definitely want you to leave your comments below because this one was fascinating. I wanted to hear what other people think about this because the stock market and the S&P have typically been correlated up until this point. When Bitcoin and when the market goes up, Bitcoin goes up. When the market goes down, Bitcoin goes down. Now, what we saw with the straight was at the bottom because that's what caused, the market to go down, and the S&P and the Nasdaq can be continuing up and to the right with the AI boom. One last treat is iron. So iron is not iron. So they are looking to make another move up. It broke character. This is, again, if you look at the patterns, all these patterns have been the same, guys. So this has a measure and move. I would say to play it safe of about 99 to 100, to 117. And if you go to the lower time frame, maybe you'll get some buying opportunities. But right now, it looks great. And this is another one that I'm watching. You can see right here. Right? You could go like that if you wanted, but it won't make a difference. Just to keep an eye on it going in an uptrend if you needed the visual. And as long as it doesn't make a lower low while pulling back, it's a buy. So this is something that, as it goes up, you can add in and then start selling off. That's what I would be looking at. I want to see how it does at 75.18. If we get a lot of volume on the sell side, because it's an extreme greed, be careful because it might not get the run that everybody's thinking. But on the technical standpoint, it should get a good run and make an all-time new high, surpassing the one in November of 25. So that's it for today, guys. If you found this video helpful and you like more and you want more content like this and you like it and it's helping you, please support the channel, subscribe, hit the bell notifications. And as I always say, stay disciplined, trade with intention, and God bless you all. Make it a great day.